Well, here we go. What a day. What a couple of weeks it's been in the stock market. This is unbelievable. It's good, isn't it? It feels so good after the last 2 years of how awful the stock market has been to finally have a little bit of time to go. At last we're starting to move back in the right direction. And today, I mean, I woke up and I saw the Hotel Chocolate, the acquisition, and I can't remember exactly. I think I might have it a little bit later on how much premium they actually paid for it. But I was looking and let's have a look. Is the premium down here? What it says how much they paid for it? 170% premium for Hotel Chocolate. I read that and I thought it said 70. And then as I was kind of like waking up after reading this, I was like, there's a 1 in front of that. That's 170% premium. And oh my days, Hotel Chocolate, what a day. 160% up today. Absolutely crazy. So with how good the market's been, to celebrate not only this stock, but there's another stock I've sold this week, which I need to talk to you about. I'm probably going to do that on Friday or Saturday. Another stock that I've sold as well for some good money. I thought, you know what? This is the time. I was going to bring it out a little bit in a couple of days' time, but this is the time to bring it out because we need to celebrate a little bit. I need to give something back to you guys that have stuck around and supported the channel for the last 2 years, and it's been difficult. You know, you've kind of been sat there going, well, you know, this stock's not doing much, that stock's not doing much, that stock's down, this stock's down. And then finally, we're starting to move out this negative sentiment that I need to reward you guys that have been sticking around watching this YouTube channel for the last kind of 2 years. And that is the Patreon. Now, you guys know we did a Black Friday sale last year. Last year, I did a Black Friday sale that was 16% off. This year, bigger. We're going 35% off. So it's normally £60 a year. Plus, normally you have Patreon fees on top of that. I'm actually going to do it for £39 this year for a full year. A full year of Patreon for £39, and that will give you access to around about 100 videos next year, which isn't bad, as well as my live buying and sell alerts when I'm buying and selling stock. Now, the way I'm going to do this to get it a little bit cheaper this year for you guys is I'm not doing the sale through Patreon. So last year, the maximum I could offer was 16% off, and I did 100 places and they all went. So this year, I'm expecting once again all places to go for £39. The way I'm going to do it is I'm actually going to do it through PayPal. So as such, you won't actually get access through the actual Patreon because it's not done through there. What will happen is I'm going to do it through PayPal, and then once that's done, I'm going to send you a Discord link, and it'll put you onto a special setting, and that will give you access to the Discord for a year. And that's where you can get the exact same features of Patreon, talk to me, talk to everyone else, see the exclusive posts, see the buy and sell alerts as well. Message me on there, all the same features basically. So yeah, if you do want to join that, £39. I'm only running it this week up to Friday next week for the Black Friday. If you want to join, either comment your email down below or send me an email, which is jkrinvesting@gmail.com. So there you go, guys. Anyway, let's get on to this anyway. Hotel Chocolate, absolutely amazing. Obviously, bit of surprise, Mars are going to be purchasing them 170% premium. Now, I looked at this and I thought, I actually think this is quite a sensible move for both companies. You know, Hotel Chocolate are getting a nice premium on where they are right now, and realistically, we know they've had a few issues switching the business model a little bit, and it's been a little bit in and out and a bit mismanaged. But in the longer term, you know, it's a great company, and they will recover in the longer term. But obviously, the share price is slumped at the moment, as a lot of UK stocks are. They can get a massive premium. Sounds very good for them guys. Mars, obviously, you know, sells major amounts of chocolate brands. You think about Hotel Chocolate, you know, the velvetizer. Imagine now that Mars can tie that up by selling like Twix flavored or Mars flavored velvetizer packets. It works well for them. So I think both parties are going to be pretty happy with this, to be fair. And what it made me think is, like, you know, you look at the premium they paid for it. It does show you, like, when you look at the FTSE AM, and you know, it's down at the CV lows. You know, you remember that time of panic in that CV time, and all the financial performance since that time frame, and you know, the AM's same as where it was then. And you think about all that progress that's been made in that time frame, and it shows you that there's just so many UK stocks out there at the moment that are probably at really, really good valuations, and shows you that if Mars are willing to pay 170% premium on like a Hotel Chocolate, for example, you're looking at so many of these companies thinking, there's so many. There's got to be other undervalued companies out there in the UK market with how low things are and the sentiment. There's probably other stocks that are way undervalued, like what Hotel Chocolate is. You've seen the rumours around the cake box, for example. You've seen rumours around Aviva, for example, which we're going to talk about. You're looking at all those other companies and seeing how much they've been beaten down, and you're kind of thinking there could be a few more to follow here. And even if they don't follow, it shows you on a market cap point of view that they're probably a bit too low anyway. So I thought this was not just from a Hotel Chocolate point of view, but from a UK market point of view, it probably suggests there's a lot of opportunities out there. So I think, if you're a UK investor, I'd be looking for them a little bit at the moment. So after the jump in Hotel Chocolate, I was up a good amount on the position, and I thought, you know what, the cash offer's there, time to sell the position. So I have taken the profit out of Hotel Chocolate now, and obviously that gives me a bit of cash on the sidelines to potentially go buy some stocks or keep it there in case of an emergency. So obviously this is quite a quick turnaround because normally I keep this a little bit private on the Patreon for a couple of weeks before I do tell YouTube, but I thought I'd just tell you right now. After the cash offer came in and the stock's up, 160% today, I did sell my shares in Hotel Chocolate. Target. So Target, I'm frustrated by this one. Up 17% yesterday. You guys know, the Russell 2000 was high up on my watch list, and that had a bit of a jump. Target was high up on my watch list. I wanted it to drop another 10%. Didn't drop 10%, went up 17%. So a little bit annoyed by this. I wanted to get this at a very historic low valuation, really nice dividend yield, but obviously the shares have jumped a little bit. So we'll see if it pulls back a little bit after this earnings report. It can always happen, but they came out, they beat on EPS, revenue as well. Guidance they gave was okay as well. So yeah, everyone kind of went, yeah, this is too low for Target, so now we're going to buy in. So a little bit frustrated about that one because that was one of the stocks that I were looking at as maybe a 2024 target. So it is what it is. We'll see what happens there. InMode. Obviously, you guys kind of probably seeing this now. InMode is starting to have that little bit of a bounce up a little bit at the moment. But what I wanted to mention is this. As some of you guys on the Discord will know, Matty on the Discord, very active poster, good contributor to the Discord. He actually sent me a message about a conference that InMode did. Now, this is 2022, but it was actually 2023. But it was this, I think it was the same one. It was the London healthcare conference. InMode actually did a presentation. You can find it. You guys on Discord. I'll see if I can remember to post it. If I don't remember to post it, I think I might post it on Discord anyway. They did a conference and it was actually really interesting. The information posted on there from a shareholder point of view. They talked about the company's makeup. They talked about the cash. They talked about the cash and acquisitions. They talked about they actually approached two companies to buy them. Couldn't reach a deal, couldn't reach amount, and they've actually approached another two companies. So where we've kind of been criticising them massively for the last kind of couple of months about buyback, it seems like they're actually quite close to buying a company, which kind of makes sense why they're not doing that buyback at the moment. The only little worry that I did have is that they said they have approached two and they got rejected by two of them. I hope they're not pushing too hard to forcing to buy a company that doesn't really fit the mould. That's my only little bit worry about them potentially going a little bit too crazy and like we've got to prove shareholders wrong and spend this cash. That was my only little concern, but it kind of I think it reassured you a little bit and they were also talking about why the slowdown's happening a little bit, about how long it's taking to get the financing increase, how they're going to combat the financing issues. It was really good. If you're an InMode shareholder, it's a must. It was a must listen if you're an InMode shareholder, so give that a go. UK inflation came out. Obviously, the consensus was 4.8. Came at 4.6, so that was a good improvement. I mean, realistically, the funny thing with UK inflation is, you're seeing these doom, and it stagnates, and then doom, another drop. A lot of it's to do with the energy price cap most of the time. Yeah, that's what's causing the big drops in inflation, really. Obviously, the price cap's been around for nearly a year now, and it wasn't for a lot of these companies profiteering. I think it could even be a little bit lower than where it is right now. But obviously, that was a positive to see UK inflation coming in a little bit lower. Hims and Hers, same again. I mean, this has been on a bit of a rally since it reported earnings, up 33%. It's funny how it's exactly the same company from 3 months ago, and then all of a sudden everyone goes, "Oh, let's value it 33% higher." Just stock market for you guys. It's absolutely insane, isn't it? But, I mean, realistically with Hims and Hers, I mean, I would be very disappointed to see this below. I thought below $10 is a little bit disappointing to see it close this year. I think below 8 is definitely a little bit ridiculous. I mean, that's crazy, but it's good to see that finally it's kind of got a knock on the head and, you know, been moving up in the right direction recently. JD.com, they reported stock is up 7%, decent numbers. Funny thing is, in pre-market it's now down 4% because Alibaba reported the numbers and that's down 7%. So it's funny how they're kind of balancing each other out. But Alibaba, I was a little bit disappointed. I'm not fully looked into it because it's only just come out recently, but I was a little bit disappointed with the numbers. I thought I think they said that they're not going to break off the cloud segment a little bit at the moment, which I thought was a little bit disappointing. Probably maybe wait until the growth comes back a little bit at the moment. So yeah, a little bit disappointed with the numbers that were over there with Alibaba. Aviva brought some numbers out. The stock's only, I thought the stock would be up more than this. And same again, it goes back to the point, like, you know, before the CV times, this stock was like a £5 stock. Even during 2022, it's £5 stock. You know, realistically, this is definitely going to recover a lot more once we're out of the negative sentiment. This is another one of them, and you can see that recovery starting to happen a little bit now. But I mean, good numbers today. Probably should have been a little bit higher. You can see here the Aviva strong performance should support re-rating. I mean, realistically, either this stock is going to do well in the next few years or it's going to get bought out. We've seen it linked before with a potential buyout. Once again, we talk about, you know, the opportunity in the UK market where valuations have just seemed to go so low. You look at Aviva being potentially one of those that is either it's a win-win situation. You know, either it's going to go up from here because it is too low, or, you know, another company looks at this at the UK market and go, yeah, Aviva's doing really well. Look at the valuation. We can pay you a fair bit of premium and it's still a good deal for us. So once again, you know, even if the buyout never happens with Aviva, it still suggests, once again, there's a lot of UK value out there, and I think Aviva definitely comes under that category. And once again, really good numbers again today. It's 5 to 7% operating profit margin growth is what you want. You know, this company is all about profit and get that profit up, get that dividend yield and keep that dividend yield covered. That's what we want to see. Yeah, so another good one there. Anyway, guys, so yeah, hope you enjoyed the quick recap on a couple of news stories that are out there, and hope you enjoyed the video. And if you could hit the like button if you're around here, subscribe. See you in a bit, guys.